Hey there. I wanted to do a quick review on just a select group 4 stocks here by special request of a subscriber. These are fast momentum uh, trending stocks that have now rolled over. Um, so as I discussed before, managing your trades using Ichimoku with the TK cross. Right here we had a bit of a confusing signal where we had the TK cross here. So if you're following the rules, you would have been out of the trade right here. But if you're continuing to follow this stock and looking for a new entry, here was another buy signal. TK cross going up. We're above the cloud. When you're above the cloud, it's safe to look for long positions. Nice flat area of the cloud right here. Good looking support. Previously seen as resistance. Once you break resistance, it becomes support. And look, we came down and tested it right here and bounced. So, like I said before, you don't look at an exact level, but a range. So sometimes you need to watch a few days for the price action to evolve. Okay, and then we had the TK cross right here, and we have stayed. Tinkinson has stayed above Kijinson for a good trade here. Let's see what we would have captured. Let's say we got in around here at about $5, say. And we stayed in the trade all the way up here to this Tinkinson TK cross. We got in at $5. And let's say we got out, let's say we waited for confirmation here. So we got out at $12. Okay, 120% gain. Something like that. So you should be out of this trade right now. This is bearish. We've got downtrending pressure from the Tinkinson line. So this is a daily chart. This is confirmation of a downtrend. We're below the cloud on the daily chart. Cloud is twisted and turned red. Another indicator I don't talk about too often is called the lagging line. This line that is stays behind the price action is called the lagging line. And lagging line below the candlesticks is a bearish sign. So we could get a response down here at the 200 moving average, but I don't like to trade those. I like to wait for confirmation of price back above Tinkinson and looking for that TK cross again. The problem with this trade is once you get a TK cross, then you're going to have this red cloud to contend with. So technically, you're not supposed to look for long positions when you're underneath the cloud. You wait until you're on top of the cloud to look for long positions. So it was safe to look for another long position here because we were still above the cloud. So if you zoom into, let's see, 4-hour time frame gives you a little bit different perspective. You could have gone out of this trade earlier. We're at about $15 here. What I mentioned before, getting out about 14, I think, huh? Okay, see at 14, we dropped below the cloud. Cloud can be support. We got the TK cross. We tested the cloud. We fell underneath. We tested the top again and failed. So definite sell signal right here at about $13. Now we're below the cloud. All kinds of crazy resistance. We got resistance from Tinkinson, Kijinson, and the cloud now. Oversold momentum. A little bit of a bounce right here. We're just oversold bounce. So to track fast momentum, I like to look at 30-minute chart. So you can see that bounce right here. And look, we're getting resistance, or we're coming into resistance area from the Kijinson line and the cloud. So the 30-minute time frame is not as powerful as the higher time frames as far as how the price reacts to these indicators. But when you're tracking fast momentum, if you're in a fast momentum swing trade and you want to take your profits early, then or maybe you want to get in. If you want to short this right now, this could be a good baseline. And if that baseline fails, then you've got your second baseline, which is a cloud. So sometimes it's nice to scale into position. So maybe you take 30% of your intended trade right here, and you can add another maybe 20%. So now you're 50% in. And here's your next baseline where it could react and go down. Once it gets above the cloud, then it's definitely going against you. So all these time frames are useful in a different way. Okay. Let's look at SENS. Daily chart. We've closed above the cloud, so technically we could look for a long position still, but with this TK cross right here, I would not. I would wait for this price action to evolve more and look for another TK cross going up, and you want to see price on top of the Kijinsen and Tinkinson line. Okay, this is bearish right now. So it's normal for price to try to react at these areas, but you need to wait for confirmation that price has respected that area. So just because you see a first reaction does not mean it's time to place a trade. There is a nice flat bottom right here. It's an area of support. But like I've said before, the thin steep cloud, this is dangerous momentum. So one of the problems is this is up a lot in a short amount of time. So you have all these other traders with profit below you. And right now we have kind of unsafe market conditions. We're in a correction, which is why a lot of these are crossing like this. High risk, people are reducing their risk and getting out of some of these. So I don't like that for a long position right now. 4-hour chart. See, let's see. We're testing the bottom of the cloud, top of the cloud here on the daily, and also on the 4-hour. Look how steep and thin this cloud is. Starting to get the twist here. Seeing it's gonna, the shape of the cloud tells me it's getting close to twisting. Let's look at the 30-minute for fast momentum. Oops. Yeah, we're coming into an area of resistance right here. I would look, I'd be watching this area Monday and Tuesday. Probably another reaction to the downside. Unless market sentiment changes. But for what I see right now, this is an oversold bounce, and I would look for a continued move down. CTRM 30-minute chart for fast momentum. We're right here in an area of resistance. This was kind of a strong move. Okay, 30 minutes. So this chart had kind of a strong day, Friday. But we'll see what happens Monday. But as of right now, this chart is bearish. We're still above the cloud on the daily chart. See, price is reacting to this 50-period moving average. Like I said, it's normal for price to react there, but it needs to respond in a positive way and get back above these moving averages. Got your TK cross right here. Big red flag. Okay. Right here was your sell signal on the 4-hour chart. So to me, this kind of fast momentum is not a good investment idea. They're good to trade. You can capture some good trades with these things. You just need to be really careful. And with this steep of action, when you're actually live in the trade, it's hard to tell. It's kind of hard to track these. So, I mean, you could wake up in the morning, this thing could be clear down here over, pre-market. You're just very high risk. This is very high risk trading right here. Fast momentum. I do like to watch them for education, and it's easy to see. You look at the chart history and you can easily see what you should have done. The key is looking at what you should do now based on what you see. Okay. I don't like that. I would not be in this trade. Unless I could short it. No, you can't short it 80 cent stock. All right, let's look at MOVN or NOVN. I'm not even really familiar with these companies. I'm a technical trader. When it comes to trading momentum, it's all about technicals for me. I could care less about the story because these things just trade so wildly. I like to look for good, long, steady uptrends for investments. These things are just wild. Let's start with the daily. We're still above the cloud. You could technically look for long position opportunities, like I said, but once again, the TK cross. Price below Tinkinson. So I'm mentioning the same thing in all these trades. So, I mean, you're going to catch on and you're going to learn to do this yourself. So that's my goal in these videos, is to teach you to do this yourself, you know. And I think you're gonna find this is pretty easy. This system is pretty easy to understand once you understand these components. Keep your charts simple. Don't get confused by a bunch of other indicators. I mean, volume can help. Look at the volume right here where people got into this trade. We came down and we tested the Kijinson line. So if you wanted to trade this, you could have got in around here and make this your baseline for your trade, okay? The Tinkinson is fast momentum, but you definitely want to stay above Kijinson. Look how far we got above the cloud here. I've said before, the higher you get away from the cloud, the more likely you are to fall. Same with going down. The further you get away from the cloud in a downtrend, the more likely you're to have a pullback. So let's look at the other time frames here. 4 hour. There was your sell signal here. See, momentum is, you get some confusing signals here. I mean, technically you would have exited the trade here. You had a TK cross right here, but then we kind of bounced off the cloud and we resumed. So this kind of trading is just dangerous. I don't like it. I like to watch them to learn. Okay. I'm not even sure what the story is behind this stock. I enjoy analyzing the technicals. So look at this bounce. We've actually bounced above the Kijinson line, and now the cloud is going to come into play. This is almost a reversal signal. Well, we had the red candles a little bit bigger than the green, but when you see candles of equal size and a V-shaped bottom, day traders like that because you can pull off a pretty good day trade with something like that. Twin sisters candle or whatever you want to call it. So that wasn't quite the same size, but you see two candles the same size just like that right together. That could actually be a good signal for a day trade. I don't get into day trading. I'm busy working, so, and I look at charts a couple times a week, or lately it's been nightly at the way markets are going. So anyway, that's it for these stocks, and I hope that helped you out and teach you some more about the strategies of how to trade these things. Check you out next time.